Okay, so welcome to today's market review and expectation. So let's head straight into what I was expecting in the previous week. Okay, so if you watch the previous week's video, I was expecting price to actually rise, and if it should go down or if it should have a little retracement, we head to the high of this particular candle right here. I was expecting a little drop into that particular candle. Sorry, the high of that particular candle actually. And then on Monday, we would actually tackle this particular weekly fair value gap high. Then the weekly fair value gap low, and then the monthly fair value gap low, which are noted around this particular level. That's 104.290 level. Okay, and then we clear that, and then from there we tackle this particular daily fair value gap, and then our ultimate target was around this particular high here, this fair value gap. That's the weekly fair value gap high. Okay, so the low end of this particular fair value gap, okay, on the weekly level, its high end is right here. So I was expecting that price would clear these highs and then probably reach into that particular high end of that particular fair value gap. Okay, so but price actually opened up, and then we traded on Monday to the lower end of the daily fair value gap, as I stated to be the first target, and then the higher end of this particular fair value gap. Okay, this particular high end will be the ultimate target for last week, but we reached into this particular fair value gap, the low end of the daily fair value gap, and we dropped lower. Okay, we dropped lower. So what am I actually expecting in the coming week? In the coming week, I'm actually expecting the dollar index to rise to where I was expecting the dollar index to reach the previous week. Okay, that same level. Okay, that's the low end of this particular candle, which comes in at 104.835. Okay, maybe your feed might give you 2 decimal places, so it should be around 104.84 thereabouts. Okay, so I'm seeing all this drop down, okay, as retracements. Okay, as retracement. I'm seeing all this drop down as retracement. So I'm looking at this particular side right here. Okay, if price would actually go down, I wouldn't expect it to close below this fair value gap. Let me identify it. Okay, so we don't count the Sunday's candle. Okay, so this particular fair value gap, you see how we're having rejection or at the higher end of that particular fair value gap right there. Okay, I wouldn't want to see price close below that particular fair value gap. Okay, so I'm looking at we open up on Sunday, and then probably maybe a little drop into that same fair value gap, if any, and then we head towards the targets. Okay, so I'm still looking at price reaching into that particular level. Okay, that particular level, and then should we see any further movement up, I'm expecting price to reach into the higher end sorry, the midpoint of this particular range, this fair value gap high, and then this fair value gap low end, okay, which comes in at 105.038 on my XNS feed. So let me okay, so that's the midpoint of that fair value gap. And, we could potentially reach into that particular end. Okay, but I'm not expecting price to close below this particular fair value gap. If it should close below it, that makes my trade now for this week. Wouldn't this coming week no trade for me if it should close below that particular fair value gap, which is this area. No trade for me. Okay, so let's take a look at the seasonal tendency as I always do, and then see what price has to offer in the seasonal, or why I'm expecting price to actually go high. Okay, this is the euro. Take a look at the dollar index. Okay, so this is the dollar index. Okay, and then I think the first 2 weeks also, you should see the dollar rise, then a little bit drop down, and consolidation into the month of March. The month of March, or from the last week of February to the first week, or to the opening of March. Okay, you should see rally into March. Okay, so I actually take a look at where we had our lowest points, okay, to the highest points. So in February we had our lowest point, okay, in February, that's from the first week of February, okay, and then our highest, or looking at March data, we have a bullish month for the month of March. If you take a look at all the years data, okay, if you take the 5-year, which is the pink, the wine giving us the 15-year data, and then the blue, that's the 35-year data. Okay, we can see that price has been bullish for all those periods in the dollar index. Okay, if we should take a look at the euro, you should see similar thing. Okay, euro, we are having a bearish stance, okay, from the month of February into the month of March. Okay, so which actually solidifies or confirms our analysis. And yeah, anytime we expect the dollar index to rise, okay, we also expect that all foreign currencies, that's the euro and the pound and any other currency aside the dollar, to also drop. That's when you're expecting the dollar index to rise. Okay, now let me take you to one particular site, okay, I find very useful, and the data over there actually is much clearer and very easy to use. Okay, so this site is called Pipnode, okay, pipnode.com. Just type pipnode.com in your browser and it should take you to this particular website. So on this website, it actually gives you a simplified way of using the seasonal tendency to trade. Okay, you see, the seasonal tendency actually gives you the seasonality data, or the data for one particular asset. Okay, so if you take the dollar index, this is the data for the dollar index. Okay, and you have data for other currencies. This one is the data for New Zealand dollar. Okay. Now, instances where you are trading a pair. Okay, that's the if, for instance, you are trading Euro USD or Pound USD. Let's take a look at the Pound USD. If you are trading the Pound USD, we will know that every time the dollar rises, all foreign currencies drop, as I said. So this data is a 10 years data, okay, for Pound USD. And on my right hand side, right here, we have the monthly data. Okay, in the monthly data, we have the month of February. As I said, we are expecting bullish dollar. Okay, so pound and euro, we expect them to drop. Okay, so the amount of data according to this site, the peak mood, we are expecting price to drop, which is a confirmation of our analysis. Okay, so in the month of February, we expect pound to drop. And let's take a look at the other period. Okay, let's take a look at 5 years period. So this is a 5 years period, and then the 5 years period, if you should take a look at the month of February into March, it's also dropping. Okay, it's also dropping. Let's take a look at the 15 years. So this is the 15 years data, and as you can see, in the month of February, we expect pound USD to actually drop. Okay, you can actually backtest. You can actually go through time and see which months the pound USD dropped, okay, and see how the market performed. Okay, so as I said, you're expecting the dollar to rise I'm expecting the dollar to rise in the coming week, and then we've confirmed that in the seasonal tendency for individual assets, that's the USD. And then this new phone I have, peak note, is also confirming my stance. That's I expect for other foreign currencies, that's the pairs I trade, euro and then the pound to drop. Okay, so let's go to the euro USD. Okay, so this is a euro USD charts. Okay, and the month of February, we expect euro USD to drop as the dollar index rises into the month of March. All right. So this is for the 5 year. Let's take a look at the 10-year chart. Okay, so there's a 10-year chart with the same drop in the euro USD for the month of February and the month of March. So this chart is actually accurate, and you can literally to use this chart to trade, you don't really need much of analysis. Okay? You can literally open your website and then, you can literally open your trading platform, whatever platform you're using, and then based on the chart, beginning of the month, you can place your trades. Okay, and then you are assured of higher gains for that particular month. Okay, so that is it for this week's market review and expectation. Alright, so let's keep our fingers crossed. Yeah, before that, I almost forgot one thing. Let's take a look at what news release to expect in the coming week. So this is the Forex Factory charts. Then on Monday, we are at 6 p.m. in the evening. Okay, we have high impact news. Okay, around 6 p.m. affecting the pound, and then at 5 p.m. the mid impact member backing speaks. That's the FOMC member, and then Tuesday we have quite a number of them. 7 a.m. in the morning GMT, we expect high impact news to affect the pound, and then the mid impact as well. Okay, and around 1 p.m. CPI. All right, so on Tuesday, price is going to be really there's going to be a whole lot of movement in the forex markets that's affecting the euro USD. the USD pairs. Okay, there's going to be a lot of activities in the market around. That's on Tuesday. So on Tuesday, let's much cautious in our trades, and then Wednesday at 7 a.m. CPI affecting pound, and 3 p.m. We have another the Bali speaks, which is going to affect the pound. We also have Thursday, right? Thursday GDP for the pound, and then the mid impacts prelim GDP that around the same time, 7 in the morning. Okay, then the euro, we are looking at Lagarde to speak around 8 a.m. That's the mid impacts. Then around 1:30 in the afternoon, we have the core retail sales, the Empire State Manufacturing Index. We have the retail sales and the unemployment claims. Okay, those high impacts going to affect the dollar index around 1 p.m. in the afternoon. Okay, and then another mid impacts, but around the same time. So let's be very cautious. This coming week is going to be fireworks. Then Friday GDP high impact at 7 a.m. Retail sales, and then 1:30 p.m. USD. We have the core CPI, PPI, then the building permits data to be released at 1:30 p.m. in the afternoon. Then 3 o'clock p.m. we have the prelim UM consumer sentiments, and then also affecting the USD. Alright, so this coming week is kind of filled with a lot of activities, and there's going to be a lot of volatility in the markets. Okay, so let's be very cautious as we trade and consider our leverage. Alright, so yeah, so let's be very cautious and in our trade in the coming week, and you'll see what the market has to offer us. Stay safe.